Market manipulation. What is it? And why is it happening today? Why did it happen today? Let's talk about it. The first thing is what is market manipulation? You might think, what is this guy talking about? He does not know what he's talking about. Listen, if you've been trading for more than, I want to say 5 months, 6 months, you have noticed patterns. You have noticed candles move quicker than usual. You have also noticed that during the day, for example, from 12 to 1 or from, pre-market or aftermarket, there's usually volatility. In between those zones, there's no volatility. And it depends on the day, if there's news or no news. Now, you'll also notice that if there's no news on that day, and I mean no news like there is news, but it's very, very low impact, as in it cannot impact the market in a way that you would see CPI impact the market, right? If you've been trading for more than 6 months, you have definitely seen CPI happen, and you see the effects of that candle or of those candles. So you can see it that CPI is a high impact news that will impact the market. So on those days that we have no news, no high impact news or no high impact news that hits throughout the day, breaking news, we have nothing like that. There shouldn't be any candles or any kind of volume or buyers or sellers that are moving the price all the way up or all the way down, right? We should see a nice trend, or maybe not even a trend, just consolidation, right? Because the market, there's no buyers, there's no sellers. But with manipulators, which are hedge funds, banks, the New York Stock Exchange, that let those orders go through, those are the market makers, the market manipulators. Now, I don't want to go out here and say the market is fully manipulated, but you have to look at it that way sometimes. It's manipulated, drivenly manipulated. I don't fucking know how to say it. It's not 24/7. Sometimes the price action is retail. Sometimes there's a lot of people buying and selling, but sometimes you'll see that there is some hedge funds that at some liquidity point, you'll see those candles form faster than you've ever blinked your eyes. And you'll see the price drop or get bought, even though we're super bearish or super bullish. And you've seen that happen. Don't tell me, no, that's never happened. It's just buyers and sellers doing their thing. No, dude, wake up, bro. Those are banks. Those are hedge funds doing what they do best, taking you out of the market with these big ass fucking moves. Today was one of those days. Now, was today a day I took a trade? No. Why? My setup and my strategy just did not align. There was nothing that I was looking for pre-market. There was nothing I could take a trade on. And the biggest mistake I've made in my trading years is forcing a trade. I want to get in the market. It's Monday. I want to make money, but forcing a trade will only lose me money. So I'm glad to not have traded than to lose money, right? That's my concepts. So let's talk about today. First, I want to go over news. So let's go over news. Like I said, Monday, look, we have two things. That's all we had today. Now, FOMC, this is huge, but unless it's not Jerome Powell or anything, it's really not that big of a deal. Really not that big a deal. Happened at 12:30. So all this news was, this was lunchtime and this was hour before closing. You really are not in a position, well, you could be, but everything happens basically in the morning if it's high impact, unless it's FOMC at 2 p.m. So as you can see, I'm on the 4-hour. Okay, so it looks like a 5-minute chart, but I'm on the 4-hour. As stated previously in my Discord, if you guys are in there, let me go ahead and what's it called? Pull it up really quickly. Where's the charts? Okay, there it is. So here, this was from yesterday. As you can see, we had that fair value gap, we had that move up, we had that 4-hour market structure shift marked out right here. And then we had those engineered highs and that inversion fair value gap here that could be used as an inverse, tap into the consequent encroachment or fully trade into it, and then kind of come back down and we draw the OT and we come back. And guess what? That's exactly what happened. Now, what exactly happened was we ran up at 9:30 and I watched this live straight from class, just bang, straight up, shot up like a rocket. We eventually around 12, I think before 12, we closed above that 4-hour market structure shift. I was really happy about this. The only thing I didn't expect was a move all the way up to this inversion fair value gap. And look at this price action. Where did it come into and where is it closing? It came above the consequent encroachment, which is above the the midway point of this inversion fair value gap. It got sold off and closed under the consequent encroachment. Not fully under the fair value gap itself, but it closed under the midway point. That's what I like to see. That shows me that, oh, price has hit some kind of ceiling for the moment that it needs to break. But what this shows me is that, and this is the big picture, really, really big picture, and this is going to get really, really intense, but what this shows me is that there is a market structure shift happening. And even if this is happening on the 5-minute time frame or the 4-hour, it is the same concept, same strategy. What are we going to do? We're going to identify some kind of imbalance. The only imbalance that I see trading myself is this one on the 4-hour. This big boy. Where's my busy? This guy. That's the only guy I see. That's the only fair value gap I want to enter off. Now, is it the consequent encroachment? The full? We'll figure that out later when price comes back. We'll see how price handles it. But for the moment, what I would like to see is price obviously make a swing high here. So that swing high here, and I want to see this 4-hour over, when I go to sleep, or not even when I go to sleep, when I go to bed, I want to see this candle fully close under here and fully close below this high. That would create the swing high, and that would let us draw our OT, which is from the swing low all the way up to that swing high, right, which would be here. As you can see, the discount, let me drag it out real quick. The discount zone is under, and as you can see, the 0.5, right, that's the halfway of this range from that swing low to that swing high. So that means that anything that comes under here, we can buy. And guess what we have under this? We have the consequent encroachment of that BISI. That seems like a pretty good ideal trade setup to me. Now the OT, I've checked this out later, doesn't look too promising. I don't really like when the OT is super like close to where we started on our way up, because that means that price would have to retrace everything it's just gained all the way down and enter off here. That seems like a waste of buying and everything. That just seems like a waste. So I think personally, it's not even going to interact, or maybe it will just touch the BISI. It will close above, but it'll trade all the way down to that black level. But it won't even. It's not even going to get interested in this golden zone level. I think that the consequent encroachment of this BISI is strong enough to bounce price all the way back to all-time highs. Another thing I want to show you is standard deviation off this market structure shift. So what do we, I didn't actually delete it. All right. What do we actually get from this standard deviation? Now, I've drawn two. The first one is from this swing high to that swing low. Okay. Now, this one's a little unrealistic. When I talked about this in my last video, I explained that when you draw standard deviation, it should make sense with price action. When you look at this, it simply does not. The -1 is nowhere to be found up in these highs, and the actual target of our trade would be way above all-time highs. So that one doesn't make sense. I don't even want to take a look at it. The one that does make sense, and the one that created the range, is this one. That high, that low. So swing low to that swing high. This one makes sense. The -1 lines up exactly, almost exactly, with the consequent encroachment of this inverse fair value gap. And the target right? If we enter off here with calls, the target is a negative 2.5 or negative 2, anything before the all-time highs. Look where it lines up. Basically right in the middle of all-time highs for SPX. Now, tell me if that's a coincidence or not, but I'm taking that as a call. I'm taking that as SPX want to go bullish, and it's going to go bullish. And if it needs to go bullish, it will. And you know why? Because the market is going to be driven and the banks are going to be buying. The hedge funds are going to be buying. So if everyone's buying, why are you selling? That's all I got to say. Okay. Let's look at upcoming news again tomorrow. Not much. Wednesday, not much. I did say pay attention to the bond actions, and then Thursday and Friday are going to be my day offs. This is where we either get a rip right through all the way to the all-time highs, which definitely could be happening here. The only thing, guys, if you guys are still in this video, the only thing I want to see happen in the next 2 days, is a nice move down into this fair value gap. And I'll do analysis later tonight into which area I would like to be inclined more and where to enter. But I would like to see price, first of all, close under this high. And I would like to see price come down over these 2 days. So Tuesday, Wednesday, into this fair value gap, and hopefully enter off here with our ICT 2022 buy model here. So that's the plan. If it doesn't work out, it doesn't work out. If we got stopped out, we got stopped out. I haven't really done this strategy on a higher time frame that takes multiple days to set up, because this is the 4 hour, so it'll take at least like 2 days to set up basically. So it's gonna take a while, but we're gonna have to see what we do. Let's just look at the daily, what we're offering. It will kind of look weird on the daily. I'm not gonna lie, we just have this random bullish candle that hits a fair value gap. We could easily just break right through that and go all the way to the all-time highs. But personally, that's what I want to see. I want to see a down move. I want to see something come down to retrace, and then we get that same exact candle with CPI to just blast off into space. I think that could be great. Okay, so that's the analysis. Okay, let me know if you guys have any questions. I'll be happy to answer them. Guys, also, if you're still here, join the Discord. I beg you, please. We are posting a lot of information there. There's a lot of stuff happening. We're about to go premium in just a few weeks. So actually a few days, we've actually got the whole store set up. Basically how it's going to work is you're going to have free access when you join in any kind of source, right? Any link you get. It's a free Discord. We get free, advice, everything, charts, anything. But if you want premium access, you can also buy that premium access, and that gets you access to live trading, live call outs, option call outs, special Q&A. So we answer your questions, personalized. We might even do one-on-ones, right? So you can request one-on-ones, really get down on the analysis. We review your trades. You get help from us. And giveaways and a bunch of other stuff. So if you guys are interested, all right, please join the Discord now. And when that premium thing comes out, you guys can start buying that. So without further ado, I will see you guys tomorrow. And if not, I'll see you guys whenever I take a trade. Peace.